Forever Paid Squad, we are back, and in this video, I'll be talking about what is Forex and how you can get started. So, you already know how it goes. Run my intro. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt, and I teach day traders just like you how to become profitable by teaching different tips and strategies. With that being said, let's get into this video. So you want to get started in Forex, but you don't even know what Forex is. So pretty much the Forex market, or also known as the foreign exchange market, is the speculation on how a currency will move, whether it be the euro, the dollar, Canadian dollar, New Zealand dollar, the Japanese yen, all these currency pairs. We speculate on which direction the market will move in, and pretty much the way we do that is with technical analysis. So pretty much we have a base currency and a quote currency. The base currency would be like the New Zealand dollar, and the quote currency would be USD. So pretty much we could have speculated, if you look at my chart, we could have speculated based off of technical analysis that the New Zealand dollar was going to move up against the dollar. So the New Zealand dollar is moving up currently, right? So currently the New Zealand dollar has moved up, as you can see. So if you look at the actual dollar, because you could look at the dollar as well with the DXY, and you can see at the same time the dollar moved down. I could go even further for you guys to give you guys a better example. So this whole time you can see that the New Zealand dollar for like the past month has been moving down, and you have the dollar which was moving up. So this would be the quote, this would be the base. So every time the New Zealand dollar moves up, that is weakness in the dollar and strength in the New Zealand dollar, or anything that has a base currency going against the quote currency, which would be the dollar. So it could be euro dollar, it could be gold, it could even be gold like metals, so gold, silver. It could be Aussie dollar as well. So anything that has base currency versus the quote currency, which is the dollar. So just remember that the dollar would be like the second currency in a pair. So we also have where the dollar is flipped around and becomes the base currency, like dollar CAD. The dollar is the base currency, so don't get that confused. Like, let's see, dollar CAD. So see, the dollar CAD is the base currency in this pair. So the dollar would be going up in strength, and the Canadian dollar would be in weakness. All right, so another way just to easily see that is like go back to this New Zealand dollar. As you can see, the New Zealand dollar is going up against the dollar, and dollar CAD, the dollar is the base currency, so it is currently going down in comparison to the Canadian dollar. So that is a quick breakdown of what the currency market is. It's pretty much speculation, and we speculate through technical analysis. What's technical analysis as well? So technical analysis is pretty much how we break down the charts using different ideologies. Pretty much we got like market structure. I have all these videos in my channel, so you could actually go and watch these videos if you haven't. But so we have market structure. So we got high, low, higher high, higher low type of thing. And in the opposite direction, it'll just be the opposite. So yeah, when the market is moving downwards, we got higher low, lower low, higher low, and lower low, so on and so forth. And pretty much what to know directional bias is another thing. So we have market structure, which gives us directional bias. So once we see market structure broken, we have a shift in directional bias. And directional bias is pretty much which way the market is currently moving or trending. So we have range, which could be moving in a range, which is sideways consolidation. We also have the trend. Is it moving in the trend? Don't go against the trend. The trend is your friend. These are things that you will hear once you start studying, trying to get into Forex. So, or trading overall. It's the same concept over different things like the stock market. So we got market structure and we got like the market condition, which is it trading in a range or is it trending? And we also have directional bias. Like I said, directional bias has the market broken market structure. So you a shift in market structure, which I kind of already did. So we have lower lows, lower highs type of thing going on, and then we broke this lower high, so that would be a shift in market structure. So now we could say the market is gonna move upwards. The market would be in an uptrend now. It was in a downtrend, now it's in an uptrend because we had the broke of market structure. And the next thing you want to know for technical analysis is where to actually get in on a trade. So we have a simple tool called the Fibonacci. Fibonacci has been around for many years. You could do a whole Google search on it, on Fibonacci, and you could see that it's in everything that you could think of. So Fibonacci, we pull out a Fibonacci, and you have retracement levels to where the market will pull back to. So pretty much we're looking for one of these levels to get hit. Either the 78, the 61, the 50, or the 38 Fibonacci levels. So that's how we look to enter a trade. That's what we use to look to enter a trade once we have the market condition, the directional bias, and the direction of the market. We look to where to enter the trade. Once we know where we want to enter the trade, we look for something now called confluences. Confluences is pretty much reasons to why we would be looking to enter the trade at this specific point. So for this example, I'll give you a quick example. The confluences I see here to enter this trade, because another thing, we look to enter on a pullback. So see the market was trending down, we're obviously going to look for a pullback, some type of pullback to enter the trade. So on the pullback, using the Fibonacci, we pull out our Fibonacci tool, which is right here, and we use TradingView because it is the industry standard and just a clean, crisp layout to use when trading the Forex market. So quick confluences, which are, so we have the moving average as well. Moving average is another technical tool we use to help us with directional bias. So we have the moving average, confluence number one. We have the previous trend line, which it tapped into. Confluence number 2, we have market structure, or support and resistance. Support and resistance is another thing we use in technical analysis. I do have videos on that as well on this channel. You could check it out. So we have previous resistance right here. So let me just give you a quick spiel on what support and resistance is. Support is where the market hits the floor and bounces off. Resistance is when it hits the ceiling and can't go past the ceiling and bounces off, goes back down in the opposite direction. So we have resistance right here. So confluence number 1, once again, we have the moving average. Confluence number 2, we have the previous trend line, a retest of the trend line. Confluence number 3, we have resistance. So those are 3 confluences, and all you need really is 3 confluences to enter the trade. So then we will enter the trade somewhere around here. Obviously, you could break it down more on a different time frame. You also have time frames as well. So this would be monthly, weekly, daily, 4 hour, 2 hour, 1 hour, 30 minutes, 15 minutes, 5 minutes, 3 minutes, and 1 minute. So to get a better entry or better risk to reward, I'll go into risk to reward in a second. You'll want to look at to enter on one of these smaller time frames. So you could have entered pretty much basically off this candle right here on the 1 hour time frame or lower time frame. You could look for an entry. And risk to reward, we could pull our risk to reward tool. So risk to reward is pretty much what you're willing to lose, because there is always risk in this, to what you want to gain. So perfect risk to reward is always 1 to 2, not 1 to 1, 1 to 2, and better. So 1 to 3, 1 to 4, 1 to 5. So as you can see, we have the Fibonacci extension levels as well. So that's where you look to exit your trade once it hits one of these extension levels, the -27 and the -61 extension levels. So as you can see, it hit the -61 extension level to the T, and our risk to reward is pretty solid. You could say that is 1 to 4, go to 30 pip stop loss. I'm not going into what are pips. Quick Google search will tell you what are pips and the whole breakdown of how to use pips, the standards, mini, micro lots that you could use to enter trades with. So that is pretty much Forex trading in a nutshell. We also do have, that was technical analysis. We also do have fundamental analysis. So if you go to like Forex Factory.com, this is fundamentals, where we have news releases. So fundamentals is based off of news releases, and the color is pretty much, you can see, based off the impact, and we have the currency pair as well here. So this could influence how the trade might go for the day, if there's going to be a lot of buying or a lot of selling, depending on how well or how bad it does against the forecast. So you can see what these is pretty much pretty solid going against the forecast. The actual is pretty solid going against the forecast. It's all in the green. If it was in the red, then you know it was something negative. And to be truly honest, I don't use fundamentals that much, because fundamentals is pretty much manipulation, just a reason for the price to move. It doesn't, sometimes it might be negative news, but it won't have a negative impact on the currency pair that you're actually trading. So The only thing you want to be aware of is like the beginning of the months, which I'll go to right now. Every Friday of the beginning of the month, goes Friday 2nd. So every Friday, beginning of the month, you have very high impact news which you want to avoid trading that day or that week of the beginning of the month. So especially on a Friday, we got non-farm payroll, non-farm employment changes, and unemployment rates, which will make the market go crazy and fluctuate sometimes. So you just want to avoid the market the beginning of the month or on definitely on the Friday. So that is how the foreign exchange market works. Is pretty much speculating which way the market will go using technical analysis, which I gave you a quick breakdown. There's more videos on my channel that you can watch, and a little bit of risk management with a little bit of fundamental analysis. So that is what is Forex. So if you found this video insightful, please like, share the video, comment on the video, and subscribe to the channel. And please hit the notification button so you can get more videos the exact minute I drop it. So hope you guys enjoy the rest of y'all day. I am out. Peace.